Let's talk about some of the chart busters today. We have AGI Greenpac. Saw a strong set of numbers in the fourth quarter. It came on a low base, but nevertheless, a big move is what we're seeing. Margins expanded, net profit expanded, and then the big trigger for the company as well with regards to an acquisition from the IBC. We have Sandeep Sikka with us, who's the Group Chief Financial Officer. Thanks a lot, Mr. Sikka, for joining in. And, the shareholders will be very happy with these numbers because you've outbeat your own guidance. In the last conversation that we had, you said FY23 revenues could be around 2,000 to 2,050 odd crores. You've gone ahead and done close to 2,300 crores. Just wanted to ask, FY24, what are you guiding for in terms of revenues and margins?
We still feel that from here onwards, we can maintain a momentum of around 15 to 18% growth. Given the fact that on 1st January 2023, we started the high-end glass furnace, which is 154-ton glass furnace, and that is still yet to be fully loaded. And during the last 6 months, the focus, has been on the, really the value-added products, which can give us a higher realization. We worked on internally on the plant so that we can load the plants more so that we get operating leverage. Right now, let's say when we are talking, last time our capacity utilization was at almost 92%. So we reached now 99% capacity utilization. And we are still trying to find ways wherein, we can, take more from the plant. So it really helps also on the energy conservation, and also, it really gives operating leverage to increase the margins.
We missed your margin, Mr. Sikka. Margin guidance.
Margin expansion, I think another 1% basis point in next 12 months because we've done a lot of work, but still, a lot of work is yet to be done inside the plant, which we continue, endeavor to do.
Okay, all right. So that will be around 21% or should be the margins you're looking at.
Yeah, 21 to 23% range.
21 to 23%. All right. Now let's focus, let's get back to the core business in a bit. I want to focus on this new asset that you'll be taking on board. Hindustan National Glass. By when do you take this over? Have all the approvals come in? Could you tell us that? What is the capex you'll be incurring as well as debt? Please go ahead and give us more details.
So I can broadly talk about this because we are still under confidentiality while submitting our bid under the IBC till the NCLT order comes through, which we feel that in next 2 to 3 months should get through. There were a number of activities which we had to do, like we gave the best price for the asset. Almost 98% of the lenders had approved our scheme. In October last year, we got CCI approval. In March 2023, there are certain litigations which are pending in NCLT, and we feel in next 2 to 3 months we should be through with this. In terms of the capex, we feel that since many of these furnaces have not been maintained well over last few years, we feel that 500 to 700 crores we may spend over next 5 to 6 years to bring back. Rest of the points, in the interest of the confidentiality, it will be very difficult for us to. Thanks.
So what we get from whatever you've said so far is that your bid was the highest. It has been accepted. CCI has given the approval. It will take about 2 to 3 months for you to actually get the NCLT approval, and perhaps a month thereafter, it will be merged into your company itself. And as that happens, you will have to incur about 500 to 700 crores of capex to get the plants up and running to your standard. Just a couple of things on this I wanted to understand. One is, how much did you bid for this asset? If you could tell us how much money are you, going to pay for this to come to you, plus the 500 to 700 crores, and how long before this business breaks even?
So I'm really sorry, we can't disclose the bid values here. My apologies for this, because this is still under the NCLT approval, and we are bound by the confidentiality. But we feel that we should be able to break even this asset within 6 to 9 months of the acquisition, and this will be not a merger into AGI straight away. This will come as a wholly owned subsidiary initially of AGI Greenpac, and later on, maybe once the operations get stabilized, maybe 3 to 5 years down the line, we will see how we merge it.
Okay, and what is the revenue potential, sir, from this?
We feel that we can do odd 3,000 plus crores, 3,000 to 3,500 crores plus from this asset.
This is 3,000 to 3,500 crores in the first year, or the peak potential?
Around second to third year.
Second to third year, you'll be able to do to around 3,500 crores, and you'll break even as well within 6 to 9 months.
That's our expectation.
And what does all of this do to your debt number? The last accounted number that we have is around, I think, 750 crores, right? The debt in books, which has come down from around 1,100 crores odd.
We have a net debt today. The debt when you see in the books is 700 plus, but we have deposits with banks of around 215 crores. So the net debt level is actually 525 crores.
Okay.
Primarily, funding it right now, primarily with the debt, which is being taken at the target level as well as our level, AGI level. But over the next few years, 1 or 2 years, we may look at, once the full turnaround happens, that we infuse equity and deleverage it substantially.
So what does the peak debt then look like?
It can go, on a combined basis, maybe 2 to 3 years down the line, it will be within 4 times, 3.5 to 4 times.
3.5
What is the absolute
EBITDA.
number?
The absolute number, if you could give us a sense.
It's difficult for me to give right now.
Give us a broad number, sir.
I mean, 1,500, 2,000, 3,000 crores. Just wanted to understand.
See, I'll tell you what we are working with. 525 is what we are saying, right? Then you will be incurring 500 to 700 crores. So we're already at around 1,250 crores. Then there'll be some more money that you'll be spending. So how much is that? I mean, Mangalam and me, we have put out.
If we see our debt level on a combined basis, maybe 2 to 3 years down the line, it should be in a range of 2,000 to 2,500 crores.
Perfect. That's what we wanted from you. And final question then, you said that, you have forayed into export markets such as EU, Canada, South Africa. What proportion of your revenue currently comes from exports? How much do you intend to take this to? And even the non-alcohol business, how much do you intend to take those businesses to in the next 2 to 3 years?
So other than alcohol businesses, we feel that we should be able to expand our business there from almost 30% right now to almost 40% in next 2 years with all this stuff. And in terms of the export, right now the export is less than 5%, but our target in next 4 years is that to build an extensive export base, given the fact that we have invested into value-added lines to bring it to a level of 5 to 10%.
All right.
All right.
Okay. Mr. Sikka, thanks so much for joining in. Congratulations on an absolute splendid set of numbers. But I'll tell you what, Mangalam and me are looking forward to the next quarter's numbers.
Yes.
Not just because of the numbers, we'll get in more details about this acquired asset.
Yeah, just for the market, one point I wanted to say, one of our furnaces for a relining, that furnace has already spent 12 years. So quarter one may be slightly low, but our EBITDA per ton during that quarter also will be maintained. I think the quarter two onwards, when the furnace gets fully rebuilt, this is one of the furnace of AGI Greenpac itself. It has already done 12 years, so 1 quarter may be slightly down, but off thereafter it will be again back.
Okay, take your point, and that I believe is what you've included in your guidance of 15 to 18% in terms of revenue as well. Another point for the market, AGI Greenpac, of course, earlier was known as HSI. In case you missed it. With that, we